Welcome back. You're tuned into Chartbusters. Well, let's focus on the next management. Aeroflex Industries, well, it's made a strong debut on exchanges, listing with gains of over 75%. Let's welcome Asad Daud, who is a managing director, to discuss the company's post-listing plans. Hi, Asad. Good morning. And congratulations on a solid listing. There was big amount of interest in the IPO, and listing as well is blockbuster. But with great power comes great responsibility. I'm sure you've heard that. And the last time around when you joined in, well, you couldn't give us numbers because, you were in that period. But now you can. So we want to know about that. Tell us, for the coming year, can you keep up with this 35% odd growth? Just for the last year, you did close to 270 crores. And in the last few years, your margins have improved as well to around 20%. So what's the outlook on both these two parameters? I recall you told us that actually the issue is cheap because your numbers will improve. So how much of an improvement?
Yes. So first of all, I would like to thank the lakhs of investors who have had unbelievable faith in us and who have, because of whose efforts our IPO received a grand success. Thank you to everyone. In terms of the numbers, so yes, we have been growing at 35% over the last 3 years, and we expect to do the same, if not more, over the next 3 to 4 years. And in terms of the margins, if you see that our EBITDA increased from about 15 to 20% over the past 3 to 4 years. And if you see the first quarter results also of SAT Industries, which is the parent company of Aeroflex, you will see that the margins of Aeroflex are on the upward trend. And we hope and we strive to increase the margins in the near future as well.
All right, so 35% revenue growth is a given as per you. Margins, how much do they increase to? Do they go to 22, 23, 24%? I mean, where do they stabilize?
So, yes, so at least we would be looking at about 22 to 23% for this fiscal year. But over the period of next 3 to 4 years, we expect to have our margins go up to at least 300 to 400 basis points more.
All right, and I think your assemblies and components business, you want to scale that up, right? As of the last year, I think it contributed some mid-30s. But you have a plan to scale this up big time, and that's what's going to help margins. So tell us, how is the revenue mix likely to shape up?
That's right. That's right. So, as per the last year numbers, about 30% of our revenue comes from the components business, and over the next 3 to 4 years, we plan to increase the share of that and actually reverse it. So, in the next 3 to 4 years, we hope that more than 70% of our revenue will come from the components business, because the components business they have better margins, and that will help us to increase our profitability as well.
All right, and if you could give us a sense of your overall revenue potential. Your current capacity of 11 million meters will increase to around 13.5 million meters. You are incurring a capex of around 50 odd crores. You had said earlier that you do a basic asset turn of around 4.5 times. So essentially, intuitively, this should give you 200 crore worth more revenue. But I want to hear from you, from your overall capacity, what is the peak potential revenue that you can generate, and by when?
So, so we are already in the process of increasing our capacity in 2 phases, phase 1 and phase 2. Phase 1 would be completed by March of this financial year, and phase 2 by March of next financial year. And the moment we increase our capacities, also with regards to our increase in the revenue mix from the component business, I think that will lead to almost a 3 to 4-fold jump in our in our top line. And if you see the growth that we have had over the past 3-4 years, we expect to continue the same in the near future as well.
So roughly 1,000 crores in line with what you had said to us when the IPO was opening, right?
Yeah, so if you do the math, and if you do about a 35% average CAGR, so you'll actually get to that number over the next 3 to 4 years.
Asad, the problem is, the cash flows, but you were indicating that, you're going to be improving your debtor days, working capital cycle as well. So where do you see in terms of number of days? What kind of working capital days are you looking at in comparison to what you saw in the last year?
So we have already started working on our cash flows, especially in terms of our inventory. And like I mentioned that earlier we were importing about 70% of our stainless steel coil from China. We have started to reduce that already, so that will have a positive impact on our inventory. Also, we are working to reduce our debtor days in terms of the amount of credit that we provide to our customers. So hopefully in the near future there will be more cash flow from operations, which will help us in building up our capacities.
So net, what would your working capital days come down to?
So currently our working capital days is about 100 to 105 right now overall. We expect that to come down in a phased manner, obviously over the next 1 to 2 years, to at least 75-80.
All right, 75-80. Finally, just before we let you go, and 80% of your revenues does come from exports. So just trying to understand, can't you just discount the LCs and get the money much before these 75-80 days that you're talking about, or is it not very margin accretive?
So in terms of discounting, so the cost involved in that is higher than than what we require. We are in talks with, so in terms of for all our new customers, we actually don't give any kind of credit. It's just to those customers who have been with us for a long period and with whom we have long-term contracts. To them we are providing, and also the credit happened because of this supply chain disruptions that happened last year, and now they have smoothened out. So hopefully in the near future you'll see our working capital cycle improve significantly.
All right, Asad, thanks so much for joining in. We're going to hold you on these numbers. 35% growth, margin improvement from here, from the 20% that you did, you're looking at a 300 basis points improvement, and working capital days as well, gradually trends to sub that 100 days. Have a good day, and I guess you're going to celebrate, but we're going to keep an eye out on all of those numbers. Thanks so much for joining in.